Malika. Good evening, everyone, and a warm welcome to our first earnings conference call for the quarter and half year ended September 2017. I have with me on call Mr. Vijay Kumar, our CFO, and representatives from Stellar IR Advisors, our investor relations advisor. We hope you all have received the updated investor presentation. We have also uploaded that on our website for your reference. We will do a brief summary of our operational and financial performance, and thereafter we'll be taking questions. To begin with, we recently got listed on the BSE and the NSE on the 4th of September 2017. We raised a total amount of rupees 152.3 crores, of which 25.4 crores was through offer for sale, and the balance rupees 126.9 crores through fresh issue of equity share capital. The fundraising was done to primarily set up a new processing plant at G. Ragampet, East Godavari district in the state of Andhra Pradesh, having a total capacity of 20,000 metric tons per annum, construction of which is underway and is scheduled to be completed by around the end of the first quarter of FY19. This would enhance our capacity from the current 15,240 metric tons per annum. In line with our focus on value-added products, the new capacity of 20,000 metric tons per annum would include value-added products processing capacity of 5,000 metric tons per annum. The industry dynamics that we currently operate can give us the confidence that we will be able to optimally utilize the additional capacity within 3 to 4 quarters of its being operational. Now, speaking about the aquaculture industry, the global demand has been increasing from different parts of the world with regard to aquaculture products because it is part of the seafood category, which is being looked at as the alternative protein. And as you know that the ocean cod resources worldwide have been depleting, land-based aquaculture is the key for the future seafood to take care of the seafood consumption requirements. So the global demand has been increasing across North America, European Union, and China, and also other parts of Southeast Asia. Aquaculture in India is growing at a very robust pace, and there are expectations of the supply in India growing to around 5.5 lakh to 6 lakh metric tons in the current period. The raw materials and finished goods pricing had been quite stable for the past 3 to 4 quarters, here with mild fluctuations, which were not of a significant impact in any manner. We were able to actually gain advantage by increasing our in-house farm production and also focusing on producing high-value products for our clientele. Let me now discuss our financial performance for the Q2 and first half of financial year 2017. Our total income, including net revenue and other operating income for Q2 FY18 was reported at rupees 292.2 crores, and the same stood at rupees 545.3 crores for the half year of financial FY18 versus rupees 709.7 crores in the full year of FY17. The significant increase in income during the first half year of the current fiscal on an annualized basis has resulted from higher volumes while average realizations remain largely stable between H1 FY18 and full year FY17. We sold a total of 7,598 metric tons of finished product, processed shrimp, in first half of the financial year as compared to 9,898 metric tons of sales in full year of last fiscal. At the EBIT level, we reported rupees 37.9 crores in Q2 of the current fiscal and rupees 68 crores in the full half year of the current fiscal versus 55.8 crores in the full year of FY17, translating into an EBITDA margin of 13%, 12.5% and 7.9% respectively. Profit after tax stood at rupees 22 crores for the first quarter of the current fiscal and rupees 38.7 crores for the entire half year of the current fiscal, as compared to rupees 24.3 crores for the full year of last fiscal. The PAT margin has improved to 7.5% in Q2 of the current fiscal year and 7.1% in the first half of the current fiscal, which was 3.4% in the full year of last fiscal. The profit margins have expanded on account of operational leverage as we optimally utilized our capacities and increase in the share of high-margin frozen shrimp products and lower raw material costs, as the share of our in-house farming also has been increasing as we expanded our farming operations. Going forward, we expect demand to remain firm and our capacities to continue to be optimally utilized. We continually strive to reduce our costs through backward integration and enhance our product offering to customers via value addition, thereby improving profitability of the business. That is all from our side, and I would now request the moderator to open the call for Q&A. Thank you very much for being on this call.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who wishes to ask a question at this time may press star and 1 on your phone. The first question is from the line of Dipesh Kashyap from Equity Securities. Please go ahead.
Yeah, hi Mr. Chaudhary. Congratulations for good results. Just wanted to ask, you recently attended the Goal conference in Ireland. So just wanted to know your take on the stance of EU and UK importers on the Indian shrimps. Is there any possibility that they may stop imports from India?
Thank you very much, firstly, Mr. Dipesh, to come on to this call. And with regard to your question, yes, we have been participating actively at the Goal conferences every year, as we are one of the sponsors. And yeah, the topic of discussion at that conference also was, of course, about the EU and the UK, basically the European Union testing Indian shrimp products. Now, with regard to testing of the products being imported by any country, is always the prerogative of that importing country. Now, when European Union, including the United Kingdom, as it is part of it right now, as we speak, has clearly laid down a stipulation of how they want the product to be, the quality norms, or with regard to the residues which are allowable, which are not allowable, or the banned substances which are not supposed to be there in the product. We have to implement those regulations, and accordingly, India has been doing a very good job consistently over the past years, thanks to the coordination and, in fact, the strong efforts being put up by Export Inspection Council and the Marine Products Export Development Authority of India. Now, with regard to our company, we do actually test all our products prior to processing. In fact, to tell you the truth, our business to the European Union also has reasonably increased over the last 3 quarters, giving more confidence to our customers and engaging with newer customers too. So we don't really see that the EU is going to ban. Of course, as far as EU visiting India and they're visiting all the supply nations, it is a part and parcel of their regular procedure where they would be doing it on an annual basis or a biannual basis. And they have been there last year. They have been to even our company's facility around 2 years ago. They have very much appreciated the protocols and the systems which are in place. And it is more of a confidence building measure during those visits. They also understand. So we don't really foresee that there will be a ban as such with regard to your question. And we are confident that the measures being implemented by the Government of India as well as the respective companies in the industry will ensure that nothing of such sort happens.
Yeah. So just wanted to understand, when the EU delegates actually visit a plant, so they will ban a particular plant as it happens the pharma companies, or they can have a blanket ban on Indian exports. So how do they function in this shrimps?
So Dipesh, as far as the EU health authorities' visits are concerned to India, they just don't visit plants, unlike pharma companies. They also visit landing centers, fishing harbors, farms, laboratories, both government-owned as well as private, and they audit all facilities which are responsible for maintaining the quality standards of the products which are being catered to the European market. Now, when they visit, yes, if they find any sort of issues or any non-compliance, they do inform the regulatory authority in India, which is of course Export Inspection Council, to ensure that those issues are sorted out, or those kind of whatever non-compliant matters are there, they are taken care of and everything is brought into compliance. Now, as of last 20 years since EU has been visiting, they have been giving out their concerns with regard to the presence of antibiotics, and Indian authorities have in fact set up a very strong system, and it is evolving. It's a continuous process. As you know very well, that India's aquaculture production is increasing year on year. Definitely, we will be, as newer farms get started, get created, more farming areas get created. Naturally, as factories and people are expanding capacity, even the laboratories are being set up. So all these measures definitely, under the control of EIA, will ensure that the right systems are in place. And when EU comes, we are very confident. In fact, trade is confident that the EU will be very confident and happy about the way the systems are implemented in India with regard to antibiotic testing. Yeah, so we don't really expect like a factory ban, or yes, if there are issues on an individual company, they are put on hold for some time, and subsequently when that company proves or evidences that everything is being set into order and everything, or the system is being implemented, they are restored back. As such, there has not been a the country ban or company ban as such in the recent past. There are some companies which are actually put on hold for certain period of time, so that they can rectify if there are any issues with regard to the protocols they are implementing.
Okay, so understood. So moving on to US, I was looking at the last 15-year growth data of US imports. So they have grown just at 3% CAGR for the last 15 years. But suddenly this year, if you see, the growth in imports has been in double digits. So just want your thoughts, what has changed in this single year, and is it sustainable next year or years forward?
Sir, as I mentioned earlier, worldwide the consumption and the demand for shrimp is increasing, and now you know very well that there is also a domestic industry of the wild caught or the capture fisheries in all countries. USA also has a similar industry, and as the product globally, as ocean caught resources get depleted, naturally the dependence on aquaculture products gets increased, whether it is shrimp or fish. So now the US imports, as it is concerned, this year, of course, there has been a higher increase on the dependence of Indian products primarily. I believe you were referring to the growth of Indian products being imported into USA.
No, I'm just referring to entire US imports as a whole. They have actually increased in double digits this year. And the previous 15 years, they have grown just at a CAGR of 3%. So I don't know, in single years, everybody has started eating shrimp or something like that. So yeah.
The preference of shrimp and the seafood, of course, is increasing year on year. As I mentioned earlier, the averseness to red meat is increasing also. So naturally, they are looking at seafood as an alternative protein. And in seafood, of course, shrimp is being looked at as a delicacy. And thanks to Vaname, the shrimp is available at an affordable cost when compared to black tiger shrimps, which are there on a limited scale in the present scenario. So that is the reason it is supporting the import of, it is enhancing the demand of shrimp requirements in the US.
Sure.
Yeah.
Sir, also total exports to US last year was around 1.5 lakh tons. And if I just add the new capacities that you, Avanti and Devi Seafoods are building up, so it comes to around 75,000 tons. Next year, these three players will have 75,000 tons. Now, since the total pie is not growing at that much pace, so just wanted your thoughts on how such increased capacity will get absorbed.
I personally cannot comment on how the other capacities are going to get absorbed. But as far as our company is concerned, yes, we have been enhancing our own farming area. And I'm pretty sure you are aware that the shrimp aquaculture is also increasing tremendously in all parts of India, not just the state of Andhra Pradesh, which is the major contributor of aquaculture production in India, but also in the states of Orissa, Bengal and Gujarat, apart from South Tamil Nadu and Maharashtra and Goa. So the most important point is many countries in the world today are dependent on India with regard to shrimp products. I'm just not talking about the high value consuming markets like North America, USA, Canada or European Union, but I'm also talking about China, Vietnam, Thailand, apart from the traditional market of Japan. Many countries are now dependent on India, and I'm pretty sure all these expanded capacities of the industry will be supported by the supply, which is also consistently growing and improving, because now states like Orissa also have brought in a new food processing policy, and they are also encouraging their farming activity. Thereby, even in the state of Andhra Pradesh, aquaculture is a major contributor for its GDP growth. Right. So naturally, I'm pretty sure that all these capacities will be taken care of by the supply, which is getting created over the period of time.
So, lastly,
sorry, sir. May I request you to please return to the queue for any follow-up?
Sure, thank you.
Thank you. The next question is from the line of Dheeraj Sachdev from HSBC. Please go ahead.
Yeah, hi, Mr. Chaudhary, and hi, Vijay.
Yeah, hi.
Okay, my question pertains to the realization. Are we maintaining the realization at about 650 per kg, and what has been our procurement cost in the last 6 months or so?
In the last 6 months or so, the procurement cost has been quite stable at around 350, 380 level as far as per kg basis. And it is the improvement in the realization as it is concerned, because we have been looking at higher value that is enhancing the realization. Not only in rupee terms but also in dollar terms.
Okay, and the value-added product that you mean, is it the ready-to-eat segment that we were catering to? We are entering into?
We are, yes, with the new project which is being right now under construction, and which will get completed hopefully by the end of first quarter. And we are in the new project. It is going to take care of ready-to-eat products, so that we have 5,000 metric tons capacity, which we are creating there out of the 20,000 metric tons. That will take care of the ready-to-eat. Yes.
And my guess is that the realization here in RTE segment, which is the ready-to-eat segment, will be about 200 rupees per kg higher, right?
It should be around that level. In fact, it can grow much higher, dependent on the products what you produce and the kind of packing and the forms in which you produce for the end customer requirements. Yes.
Yeah, so we can have an additional contribution of 110 to 150 despite yield loss or extra packaging that we may require?
Well, actually, that was based on the present scenario. It should be, but as I mentioned, the value-added cost, the realization with regard to value-added products is totally subject to the kind of products we enable, and it will be approximately around that level. Yeah.
And in the ready-to-cook, which is our normal steady state, what kind of volume growth are we looking at? Once the expansion is completed, what kind of volume growth can we expect next year?
So in the 20,000 metric tons, 15,000 metric tons will be ready to cook. In that category also, there are other products in the ready to cook segment which are high realization earners. Like there are certain products like vacuum packaging, and there are certain end use products which are required by the customers in their end retail packing, which will ensure higher realization also. And that 15,000 metric tons in the new facility will be taking care of that part.
Yeah, but then it will start only at the end of the first quarter of next financial year, right? The expansion.
Sorry?
You mentioned the expansion will be completed at the end of the first quarter of next financial year, right?
Yes.
So we can expect second quarter onwards when the commercial production will start.
It will be we are expecting it to be commissioned around the second quarter of next fiscal. Of course, as you know, gestation and period will be there. Also will be with regard to the approvals, and as you know, not only domestically within the country but also overseas, the required approvals will be taking a month or two. And however, we have only considered 50% capacity utilization for the next fiscal. So we are pretty much sure that by the end of next fiscal, we will be reaching the stage of optimally utilizing our enhanced capacity.
And one more thing, last thing from my side, the backward integration or setting up of our own farm hatcheries, how much will it lead to cost reduction?
With regard to the backward integration, it is we are enhancing our farming area, but it's, as you know very well, in the present scenario, it is mostly on land-based, and we have not yet. We have to. The more area we add, the aquaculture production will be enhanced accordingly for our in-house farming. So, in the present scenario, the farm level cost, of course, there is a range approximately, depending, it is subjective to, because the output and also the conditions, the climatic conditions, approximately a range of around 60 to 80 rupees, around that level, approximately. Yeah.
Okay. Thank you. Thanks and all the best.
Yeah, thank you.
Thank you. Next question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi, Mr. Chaudhary. Congrats on good set of numbers. And the presentation quality of the data that you have disclosed on your presentation is excellent. Appreciate that. So there are a couple of questions. One is with regard to the gross margins, that is revenue minus the raw material cost. If keeping in mind the realization which has been shown in the presentation, which talks about almost being flat as compared to last year in FY17, there seems to be a sharp jump in the gross profit that we do on per kg basis. Would you mind highlighting what is the reason behind this sharp improvement in the gross profit per kg?
See, the first thing is with regard to the realization is concerned, you also have to keep in mind there are rupee appreciations and depreciations which also play a factor. As such, our realizations in dollar terms have been increasing on a quarter-on-quarter basis in the last 3 quarters, as we noticed. Last year as well as the current 2 quarters has been increasing, and that is basically as we produce more of these high-value products, the realization in dollar terms will be increasing, and the rupee fluctuations, of course, which are being anyway taken care with the help of our forward contracts. But the gross margin increase is more, of course, has got to do with our in-house farming as well as optimum utilization of our capacities, both owned as well as leased. So that is actually enhancing. It has, as you know that the costs are still, they are not going to increase on par, or they are not going to increase pro rata with regard to the sales. As production increases, you also reduce your costs at the processing level, and also optimum productivity at the in-house farm production. Apart from lower some of the produce which is being purchased domestically from some states of India also being at a lower level. All put together, there were multiple factors, multiple factors which were there, which had supported the company to improve and enhance its gross margins.
Fair point, got it, sir. And has the cost of procurement per se changed as compared to FY17?
Compared to FY17, there's been a marginal reduction because, not significantly, but in between in the first quarter, of course, the pricing has been stable, and it's been going up because now there's a demand from all different parts of the world, as I mentioned earlier, and just not the USA or the European Union. So the pricing has remained quite stable actually in the last 2 to 3 quarters, and but the procurement cost for the company, of course, buying from different parts of the country and also certain sizes for which we are also working on programs with some of our farmers where we have got a committed volume from them. So that is also helping us in maintaining our lower cost of procurement.
Okay, got it. Sir, lease capacities, as I see in your presentation, you have highlighted it will continue for FY19, the 6,000 metric tons. Can we see it also being there in FY20, or once the new plant is commissioned, the lease facility will be not in use thereafter?
At this point, as you know very well, Mr. Nitin, the new facility, once it is up and running, there is still a gestation period which is required for various approvals and getting the utilization of the new facility up and running. The lease facility, at this point, we have not yet decided on that. We will be deciding on it once we are, concretely set up and running. Then we will decide. Right now, to tell you the truth, we have not yet made a decision of discontinuing it or continuing it at this point. So we'll be focusing on that point more towards the end of this current fiscal.
Yeah. Fair point. And so one last question with regard to your opening comments where you mentioned that the exports from India can even reach 5.5 to 6 lakh tons.
I will interrupt you. Actually, I did not mention that the exports will increase. I said the production level of shrimp, the raw material, is being forecasted at around 5.5 lakhs to 6 lakh metric tons. Correct. Yeah.
Okay. And what would be the number right now? 5.56, which is expected.
It should be around 5 to 5.5 lakh, around 5.5 lakh. So that is what should be approximately. Yeah.
Right, sir. Thank you.
Thank you. Thank you.
Thank you. Next question is from the line of Shikhar Mundra, who is an individual investor. Please go ahead.
Hello. Yeah, I see that you have been backward integrating. So, any plans of going into shrimp feed manufacturing?
Sir, at this point, we have not made any decision in that angle. Of course, as you know, integration both forward and backward is a continuous process.
Yeah.
Whenever we believe it is appropriate, we may look into it. But at this point, we have not yet taken any decision on that part.
So I want to know, who are your major suppliers in the shrimp feed? Because I believe it's a very important part of your farming, right?
We do have, our supply is actually divided among 4 different suppliers. It's there are few companies in the country. Of course, a few of them are also listed and a few of them are not listed.
Okay.
So, just for you, if that is the information you are trying to get hold of. But we have around totally 4 suppliers who actually cater to our feed requirements.
Right. Okay. And I see that your margins have jumped to 12 to 14%, EBITDA margins 12 to 13%, and they used to be 6 to 8% for many years. So, what's the reason, and are they sustainable? What's the reason behind this?
We are actually improvising on our margins, as I stated to the earlier investor also, that we are enhancing them by optimum capacity utilization. That is one part, and also looking at enhancing our realization by producing higher value products, which has always been our motto for the past 1 year, and we are looking at producing more. And also as we increase our own in-house farming, and I believe that we will be able to sustain them. And we strongly believe in sustainability, not only of our sector, of our business also.
So, but is that some industry level change? Because I see a couple of your competitors also have given good margins in the past 6 months in shrimp processing. So, is it some industry level, some macro change, or is it, you think it's something which is applicable only to you, as in something?
I would say that, of course, the industry has been moving very positively, and as I mentioned earlier, in my opening remarks, that the demand for shrimp products in general has been increasing globally, but also the Indian product has been establishing itself very strongly in overseas countries, primarily in the North America and European Union. I'm talking about processing and export.
Right.
I can't comment about other sectors of our trade. So, both US and Europe, India has strongly established, and in fact, they are appreciating the fact that Indian quality has been much better than other competitive players from Asia as well as South America. And we are hearing a lot of good remarks and appreciation from our customers, even old ones as well as the new ones. And I'm pretty sure that is not just for our company, but entire Indian product in which we are proud.
Do we demand a premium pricing compared to other countries since our quality is better, or is it like a commodity product?
It is, of course, it will be balanced between a commodity as well as a premium, because there are certain segments of the market which actually give a premium or actually provide a premium for certain products.
Right.
So it just depends on how much percentage of your product are you catering to those kind of markets. And as you grow them further and you develop such markets, the premiums will also get established. For example, there are some certified products, certain sustainably certified products, which actually ensure better margins. So the more of such products you can cater to your customers, definitely it guarantees better margins for sure. Better premiums for sure.
So in terms of market,
I'm sorry, sir. May I request you to please return to the queue for any follow-up?
Okay, right.
Thank you, sir. The next question is on the line of G. Vivek from GS Investments. Please go ahead.
Congratulations about the numbers. What about this?
Sir, the audio is not really clear. It's breaking.
Yeah. What about the risk factors of our sector, and what steps we are taking to mitigate them? In cyclone, what else would like to say? Sure. Risk factors with regard to weather conditions or climatic conditions, of course, with regard to sector will be there, but at the same time, it is not, India as such is not a small country, and all the climatic conditions all over India are not the same. We need to accept the fact that just because there is a flood or a cyclonic situation in some part of south of Andhra doesn't mean the entire state of Andhra Pradesh gets affected, or Orissa, Bengal and Gujarat get affected at the same time. So aquaculture has been growing steadily, even though there are issues with regard to climatic changes and climatic conditions, fluctuations in weather or cyclonic weather in certain parts of the country, but they do not impact the rest of the country, similar to how disease or any sort of contamination in one part of the country or one part of one particular state doesn't impact the rest of the area or where the aquaculture is being grown. Yeah. The thing was about the incentive given by the Andhra government, any specific steps, special steps they are taking to incentivize, and what about the other income component in your income? That means incentives given by central government and state government. Sorry, can you repeat that question? Focus of Chandrababu Naidu government on the aquaculture in Andhra, number one. Number two, how much is the other income component of your total income in form of incentives and tax benefits and other things? Okay. First question. For the first question, I would like to answer to you that the state government of Andhra Pradesh, of course, is very much focused on the aquaculture sector. As I mentioned earlier, it is a major contributor of the GDP growth of the state, and hence they are the Honorable Chief Minister and the government is very much focused, and they are in fact encouraging the farming and they are creating, of course, zoning right now with regard to aquaculture. So they are very positive of our sector, and they are also right now creating new policy with regard to food processing. Also, there is a food processing society which is also providing certain incentives and encouragement to the sector. That is with regard to the state government. And as far as your question to other income is concerned in our books, the other income was actually more pertaining to the foreign exchange gains which we had. So that is, as you know very well, that our realizations are not accounted at the actual rate. So the difference of exchange with what we are realizing, and of course the as far as the accounts, how it is booked in the accounts, that difference is being shown in the other income. So with regard to the incentives, yeah. Hello. Yeah, got it, sir. Thank you. Sorry, yeah, thank you.
Thank you. The next question is on the line of Harsh Sarawat from Girik Capital. Please go ahead.
Hello. Hi sir, congratulations on great set of numbers. What is the current interest rate which we are having?
The current interest rate, of course, it depends which kind of funding it pertains to. If it is rupee-based, it would be around 9.5%. And if it is dollar-based, it will be around 3%, 3 to 3.5%. So that depends on what kind of funding we are actually taking.
So is there any fall in the interest rate from the previous year?
No, the company actually trying to, first of all, the company's reserves are anyway going to take care of most of the funding requirements of the working capital going forward into the future also. And as far as whatever borrowing is there, we didn't really see any significant reduction in the interest rates as such. But as I mentioned to you, if the more dollar-based funding is done, naturally the interest cost will be at a much lower rate because they are based on LIBOR basis.
So that in absolute terms it will come down?
Yeah, correct. It's entirely dependent on that, yeah.
Okay, thank you.
Thank you. Okay.
The next question is on the line of N. Samraj from Dwarka Wealth Managers. Please go ahead.
Yes, sir. Good evening to you.
Yeah, good evening, Mr. Samraj.
Okay, sir. No participant has raised this, but we just wanted to tell you at Dwarka Wealth Managers, apart from doing research and planning the finances of our investors, we also do a lot of case studies. We are both guest lecturers in the local MBA institute. So some of the questions I'll be asking you in those terms, sir. So now, when the IPO took place, you not only did you leave a beautiful, tasty prawn dish on the table for investors, you had a lot of gap between the value, market value, and what you had proposed in the IPO. So just wanted to ask you is, మీ మంచి కర్మ ఇది మీ ధర్మ ఉందా సార్? తెలుగులో మీకు అడుగుతున్నాను. ఇది మీ ఫిలాసఫీ ఉందా? మంచి కర్మ ఇది మీ ధర్మ?
I mean, I would, in the interest of other participants,
yes, sir.
Was whether our motto and motive is to take care of the interests of the investors. I believe that was considering the gains. I think that was what you were asking.
Correct.
Asking. So, see, we are very much appreciative of the fact that a significant number of investors have put in their confidence in our company, and they believed us and they trusted us. And of course, we will keep up to their trust and confidence. We will not let them down. We are putting all our efforts to perform and grow well, and thereby I'm pretty sure that would also be beneficial over a period of time to the investors, also to our investor partners also. Yeah.
Okay. Sir, you have mentioned in your presentation now, we are marketing basically to chicken of the seafood firms and Walmarts and all. So just wanted to ask you, ITC is going it is going into marketing of, shrimps and end-use products. They are designing some product mixes. So would you be also, trying to tie up with ITC, which is a very well-known consumer marketing place in the market?
Mr. Samraj, Apex's core activity is processing and export, which is out of India.
Right.
And naturally, in the interest of the company and in the present scenario, including the interest of the investor community, which is all who have stake in the company, the idea is to improve and enhance the export realizations and the margins as such by, doing in a better manner with regard to export market.
Okay.
At this point, the company is not really focused on the domestic market at this point.
Okay. Then just my second last question is, one of the individual investors, I don't get his name, he's asked you about the shrimp feed manufacturing. So we basically did a case study in our institute on, we put it as AFF Limited. What we came up with, sir, is that any consultant or anyone advising you into future businesses and growth on projects, saying that okay, almost 80% to 90% of our shrimps is comes as imports or as contract processing. Why and this Devi Seafoods coming out with a 40,000 metric tons shrimp feed in our own backyard in Kakinada, and also Avanti going for another expansion. Why would we give our captive market share to others, and especially when it would definitely reduce all our input costs, increase the margins, the debt to equity ratio, the cash flows, etc., enhancing. So it would be your management, I suppose, would give a very serious consideration to this.
So Samraj, as I had mentioned earlier to the other participants too, there has not been any concrete decision at this point with regard to the feed. I cannot comment with regard to other fellow companies and other feed manufacturers in the industry.
Right.
As far as FX is concerned, at this point, no decision has been taken. However, the company's idea and the motive is to integrate backward and forward. So it is a long drawn process. It's not something that is happening overnight.
Right.
So I can't really commit or comment at this point about the strategies which are not confirmed at this point.
Right, sir. Okay, so
I'm sorry, sir. I'll request you to return to the queue for any follow-ups.
1 minute. So as just a last point to the forum, what we just did one more on the financials was that we have come out with about 292 crores sales for this quarter. Just as an information, Avanti did about 200 crores. Our net profit margins we have doubled since last year. There's almost equalized. Now Avanti basically gets a market cap of 2,846 crores, ratio to proportion on the sales. So going by just this, I just wanted to give some additional information to the forum. The fair value of our company, sir, Apex Frozen Foods, should be around 912 rupees. Sir. Just as a matter of case studies, we wanted to just inform you.
Mr. Samraj, I'm sorry, but I need to interrupt you here.
Correct.
And as I mentioned to you earlier, we are not here to discuss about those points or other companies.
Correct.
If anything regarding FX's results, the first half results, we shall discuss them, please. Yeah?
Yeah,
sorry.
just additional information I wanted to give the forum, sir, because we are an investing forum over here. That's all, sir. Thank you.
Thank you. A reminder to the participants, please limit your questions to 2 per participant. If time permits, we will come back to you should you have any follow-ups. The next question is from the line of Sunil Jain from Nirmal Bang. Please go ahead.
Yeah, good evening, sir. My question relates to more of a volume, whereas right now you're doing in the first half of around 7,500 to 7,600 tons of the production and sales. And the full year, I think you're utilizing your current capacity fully. So next year, with the new capacity, you said that the 50% more volume you can do. So do you see the market opportunity similar, that type of opportunity is available in the market for you?
Sir, first thing I would like to correct you. I did not say that what I implied earlier was that we are looking at utilizing 50% of the enhanced capacity next year, and because as it takes time with regard to the gestation period will be there, even though we start the facility sometime in the early second quarter of the next fiscal. So we are only looking at 50% utilization for the entire year on an annualized basis. That's what I implied. And with regard to your question of whether we have the market for such a enhanced capacity, well, we can clearly state that we can tell that right now we are not in a position to cater to our customers' requirements because of the lack of capacity. So so it's been a well-planned, well-drawn-out plan for the future expansion, keeping in mind of our customer needs and requirements, and also keeping them in the loop with regard to our plans of expansion. We are doing it in coordination with our customers, to be precise.
And then the expansion capacity of 20,000 tons, when you expect it to reach to full capacity utilization?
As I had mentioned, the next year we look at 50% utilization, and the second year, that is FY20, we look at around 70 to 75%. So we should be optimally utilized in the subsequent year. As you know, 75-80% is not it's quite optimum for any manufacturing facility and such.
Okay, great, sir. And yeah, okay, that's all. Thank you.
Thank you.
Thank you. Next question is from the line of Saravanan Vishwanathan from Unifi Capital. Please go ahead.
Yeah, good evening, sir.
Yeah, good evening, Mr.
For your great set of numbers and all the very best for your expansion as well. Just wanted to clarify this. Anti-dumping duty is now completely removed, or it has got reduced?
The anti-dumping duty has been reduced. It's not removed completely. It has been reduced to 0.84%. So that's not been completely removed. Yeah.
So, are there different subcategories like between ready to eat and or it is the uniform rate of 0.84%?
In the ready to eat category at this point, as of today, with regard to the US government policy, all breaded and products are not part of the scope of anti-dumping order. Okay. So as we look forward for such expansion and production of such value-added products in the future, we will be under that. We don't need to pay anti-dumping duties with regard to those products at that point. Yeah.
Okay, that's good to know. And about, have the rates for Vietnam and Thailand also been reduced, or it's only happened for India, reduction in anti-dumping?
I think pretty much if you see, they have all been at a similar level, maybe around this 1-2%, not significantly higher, or it's pretty much been around these 1 to 2% in the last few years, and even for those countries, it's been the same. Yeah.
Okay. And to a question about, just the last question, to the previous participant's question about utilization of the new capacities that is coming up. Are you expecting to use 50% in the first year of commencement itself? Commercialization itself?
That's what we are forecasting. We are anticipating.
Despite taking into the account the time required for the approvals from the regulatory agencies?
Yes, that is correct. Despite that, yes, that's what we are planning for. Yeah.
Okay, that's great, sir. That's great to know. Thank you, and all the very best.
Thank you, Mr.
Thank you. The next question is from the line of Nitin Gosar from Invesco Mutual Fund. Please go ahead.
Hi sir, sorry about this. I wanted to double check on the numbers. We delivered around 70 rupees a kg kind of EBITDA for the first half versus last year's closing roughly around 50 rupees a kg. Is it fair to just believe that the 70 rupees a kg that you reported for the first half to continue with the kind of utilization we are seeing?
Nitin, we are actually, as I had mentioned earlier to many of the participants and to you also in the past, as our focus is to enhance on the realization part and as well as reduce on the cost part. And we are, we'll be aiming to maintain these around these levels. So even if there are mild fluctuations, but that is our objective, and we would be striving for that. So the more enhanced value products we do, whatever form they are, and the more cost reduction we can do by way of own farming or also by optimum utilization of our capacities, I'm pretty confident that we should be able to. But again, it is all subject to different conditions. But as you know very well that there can be changes at a certain point. But we are looking at maintaining around the present levels. Yeah.
Right, sir. Thank you.
Thank you. Yeah.
Thank you. The next question is from the line of Pratyush Mittal from Mittal & Company. Please go ahead.
Good afternoon, sir. Congratulations on an excellent performance. As our company also does contract in-house farming, I wanted to know a bit more about this. Like as we are doing farming on almost 150 acres and then lease farming, So what kind of numbers does this thing generate for us in terms of quantum or value or margins?
We are sorry, I don't know. You mentioned a number of 150. I thought.
I mean, some of it is like your own land, and then there's a lease land that you have. So I was mentioning those two numbers from your presentation.
Okay. Between the own land, actually, the point is it is only the land which is leased. The farming, whatever is being done by the company, which is around 1,800 acres odd, is currently is actually, whether it is on own or lease, the entire farming operations, including the capital investments, except the land part on the lease land, is entirely being owned and maintained by the company. Not that the farming is restricted to 150 acres of own land and remaining is contracted. The entire farming is being done by the company. It's just that the land is leased for a long period of 6 to 7 years. Yeah. So with regard to the contribution of own farming, I believe that was your question. It is currently ranging at around 18 to 20%. We look at around 20-25%. That's what we look at. We look forward to the raw material, including the enhanced capacities of the future. We look forward for a contribution of 25% of the raw material requirement of the company being taken care by the company's farming activities.
So if you have to think about this farming part, then what kind of quantity do we produce the shrimp? So like I think for a company, if you're doing 15,000 ton kind of volume, then 20-25% of this will be by way of your own farming. Is that right?
That is what we are aiming for. Right now it is at around 20. Yes, correct, 20%.
20%. So what kind of turnover and margins does this give us? I'm asking because to be able to differentiate from other players, the kind of edge we have.
But as you see, it's not it's only around 20%. It's not a significant part of the raw material requirements are not being taken care by the farming operations. It's only around 20%, and maybe it may max out to around 25%. So now these and the farming is, as far as the farming is concerned, the capacities what you are talking about are the finished product capacities, whereas the farming, of course, is the raw material. So I had mentioned this earlier to another participant. It ranges depending on the situation of each crop and site. Location.
But approximate number that we can put around this? Or the margins? The margins, because the margins would be much higher if we think from the farmer's perspective also. What I've heard is that the ROI on farming is as high as 50-70% per season. Is that right?
It depends, as I said, because it depends on how the farming practices are and also at what level are their costing is. So it would be around that level actually. So as far as the range is concerned, it would be around for a farming activity as such. Yes, it is.
So can we consider it like this as a farming grows and the contribution increases? So this is a high margin area, and hence overall the profitability will continue to increase. Is that the right thing to think, and is this what you're aiming?
Well, as you know very well that there are limitations to everything and many things, and we don't really look at having the entire produce of the company or the requirement of the company being taken care by companies.
Of course.
Yeah. To whatever extent possible, and in that the changes will, as we also discussed earlier with the other participants, climatic conditions, weather conditions, and also disease, all of them play a role. So it's not that it is the same every year or every quarter with regard to farming. There will be changes. So it's not that it will be in the same momentum all the time. So that is the reason we are looking at a broad spectrum of enhancing our abilities on all fronts, and it's just not on farming or just on processing or on marketing. So it's on all fronts. We want to ensure a optimum performance as such. Yeah.
And this farming.
Sorry, sir. May I request you to please return to the queue for any follow-ups?
Okay.
Thank you. The next question is from the line of Dipesh Kashyap from Equirus Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity again. So I just want to understand, we have been paying rupees 10 crores for the last 2 years as a processing charges to the Royal Marine. So just want to understand if this payment is fixed in nature or it depends on the volumes.
It is dependent on the volumes, actually.
Okay, so we have doubled the volume this year, so this payment can be 20 crore this year, you were saying?
Well, it depends. Maybe, but little bit, not exactly 20 crores, but it will be varying, yes.
Okay. And I just want to understand the additional capacity that you're building. So you're saying you're adding 20,000 tons, out of which 5,000 will be value-added products. So effective volume, we will have 15,000 or 20,000. That's what I wanted to know.
The effective volume is 20,000 metric tons, out of which 5,000 metric tons will be ready to eat.
Ready to eat.
Yeah.
Okay. And so lastly, sir, can you please break your sales number into exports and export incentives, please?
Yeah, exports and export incentives, actually that has, 1 minute. I think exports was, for the half year it was 532. So for the half year, the sales were around 505 and there was a export incentive was around 2700.
Okay, fine, understood. Sir, can you please tell me why the employee expenses have increased so much this year? Because we have not grown our capacities right now. So why the employee expenses have grown so much?
See, the most important point is the company has done a capex last year with regard to pre-processing facility, which actually enables and enhances the company's ability to do higher value products for markets which we discussed earlier. And naturally that does require additional employment. So that is the reason that capex of pre-processing facility is also a contributor to the enhanced employee expenses as such.
So this run rate will continue for the year, you're saying?
It will be continuing at that level. Of course, however, at the same time, as I am always mentioning in this call, optimum utilization and better efficiencies would ensure that the cost on a percentage basis shouldn't be of significant, or rather it should be stabilizing.
Okay, thank you, sir. All the best.
Thank you.
Thank you. Next question is from the line of Krishna Arjun from Infosys. Please go ahead.
Yeah, hi. Good evening, sir. Thanks. I have two questions for you today. So, one regarding the EU ban, or the possibility of EU ban. How much of your revenue is exposed to EU?
First thing, as we had mentioned earlier, we are not really looking to any sort of EU ban on Indian shrimp products. The government of India, in coordination with the industry, is taking the necessary steps to ensure and to address the concerns of the EU health authorities. And yes, if they are having any particular concerns, they will definitely bring it out to the notice of the Indian authorities, and it will be taken care in coordination with the industry. Now, we don't really foresee an EU ban as such. I would want to clear that out. And with regard to our exposure, in fact, we don't have any issues with regard to EU. We have been increasing our business with EU over the past 2 years, which was around 15 to 18%. Now it's already 25%. We are actually increasing our business, and we are ensuring that the required protocols and systems required by the EU health authorities communicated through the Export Inspection Council are being taken care by the company. And as I mentioned earlier, the products are tested prior to harvest and prior to production, and it is the company is ensuring that only such products are exported. Therefore, the company is not really, worried about the testing which is happening in EU, because we will be more focused on taking care of those requirements in-house. So by ensuring that the testing is done here appropriately.
Right. Okay. The second question. So Vanami has been like a lifesaver for the aquaculture industry in AP after the tiger shrimp bust. So it's been in our country for a decade or so now. Do you think Vanami is in the decline? It's just a matter of time. The problems of the other East Asian companies going to come up in India? And are you looking at different varieties of shrimp, such as pink shrimp, I hear, which is coming up now?
Sir, Vanami has proven itself to be a very stable species with regard to the growth and also being lucrative for the primary producer. And as far as the industry is concerned, India has been focusing on producing better quality seed, which also ensures that a better growth happens. It is quite reliable at this point. There is no other species right now which we are looking at. We will continue to improve and enhance our export and production of Vanami shrimp. Also, whatever little bit of, we still do black tiger shrimp, which we will be doing on a regular basis to whatever extent required by our customers and to whatever extent the supply is available to us.
Okay. Thank you.
Thank you.
Thank you. The next question is from the line of Pratyush Mittal from Mittal and Company. Please go ahead.
Sir, it was the question I was discussing earlier regarding your in-house farming. I also wanted to understand about the risk part of this. Like in past we have seen there have been lots of failures for corporates which have ventured into farming, as if things go wrong, there's a much bigger loss, and so is the reward when things are going right. Your thoughts on the same?
Sir, the farming, as far as aquaculture is concerned, there are a lot of differences between how the farming activity was being conducted way back in the 1990s and today. There is a lot of biosecurity protocols which are implemented with regard to farming today in today's scenario in India and also other parts of Asia. And these biosecurity protocols will ensure that the farming is being done in an appropriate manner and also supported by the quality seed, which I mentioned earlier to the earlier participant, that the quality seed supply assisted and supported by biosecurity, the right biosecurity protocols at the farming level will ensure consistent production. That's how it is being done. Compared to in 1990s when the supply of quality seed was not available. So there were problems at that time, but now it is all SPF seed being produced out of SPF rootstock, which is specific pathogen free. So thereby quality seed guided and supported by biosecurity protocols at the farm level will ensure that the farming should be ensuring that the farming is consistent. Yeah.
Okay. And the second question is about, would love to hear some of your thoughts about your expectations on the industry and evolution from a 2-3 year perspective for the coming times. What kind of growth do you see for the Indian shrimp industry to see, or what are the key developments that you see going forward, given that every other company is trying to expand in this area? So some thoughts on that.
So the shrimp industry as such, as I had mentioned earlier also, it is entirely it is dependent on the demand, of course, overseas, and due to the averseness to red meat and other categories of meat, a lot of Western countries are focusing on seafood category as their alternate protein, which is going to take care of their protein requirements. And in the seafood category, we are very much proud to see that our product, our primary product, which is the shrimp, is a part of, and we are very much confident that the growth of the demand from across the globe, not only the Western countries, but also other parts of Asia and Middle East, will ensure that there is a consistent requirement and demand for this product. It only needs to be seen how much we can actually cater to or supply to those markets and to those demands, to be precise.
Like there are industry numbers which are being put at potential of 8, 9 or 10 lakh tons kind of production in next 3 or 5 years. is that something that you see quite achievable, or are those kind of growth rates that you're looking at for the industry?
Well, I tell you, it is, everybody would want to have a positive outlook for sure, but as we also need to see the various circumstances of different places, so and in different regions of the country. But as an industry, it is that possibility is there. It just depends, as I mentioned, various factors which will be impacting both on positive side as well as negative side. But we are confident that the growth should be there in a consistent manner at that level. Yeah.
Okay. Thank you. Wish you all the best.
Thank you very much.
Thank you. Next question is from the line of Nagesh Mutamari, who's an individual investor. Please go ahead.
Good evening, Chaudhary Garu.
Good evening, Andy.
Congratulations for the excellent results you have given, and all the best for your upcoming project.
Thank you, sir.
I understand you have appointed internal auditors.
Yeah. Yeah.
The name Karuturi and Proturi are a little related. Nowhere related transaction.
No, that's Karuturi that's our surname. That's Praturi, not Praturi. That's a different. That's a audit firm based out of Hyderabad who have appointed because of the well-experienced team which they have, and we thought they will be helping keeping everything in order and ensuring that we meet all the compliance requirements.
This is just on a lighter side. Related party transaction.
Not really. Yeah.
Okay, thank you very much.
Thank you.
Thank you. The next question is from the line of Omkar Kulkarni, who's an individual investor. Please go ahead.
Yeah, hello sir. Yeah, at 100% capacity utilization of the new plant which will be coming, what could be the
I'm sorry sir, the audio is not clearly clear. Can you please use the handset?
Yeah, at 100% capacity utilization of the new plant, what would be the maximum revenue generation?
Sir, I cannot really comment about the revenue generation at this point, but as you are already noticing, with the present 15,000 odd metric tons between the own and the lease, you are already noticing the revenue which is possible with an optimum utilization. And once the new capacity comes into play, we are confident that the more high enhanced value-added products which we can produce, the better revenue generation will be there because of better realizations. So it will be in tandem to the capacity utilization, and as I had mentioned earlier to the earlier participants also, that it is the first year is what we are looking at approximately around 50% utilization, and the subsequent year in the second fiscal, that is FY20, we look at around 75 to 80% utilization of the new capacity. So it will be in tandem to that, to tell you the truth.
Okay, and the second question is, what would be your medium to long term vision for Apex?
So to tell you the truth, Apex would want to grow as a sustainable aquaculture company on all fronts, integrating both forward as well as backward, and ensuring that the entire supply chain in a broader base is in the company's forum. So I'm not really giving you any numbers as such, but yes, we want to be among the leading players and in the country and also in the world with the way things are going and how our expansion plans are. We want to be among the leading aquaculture companies in the world, and we will be doing it by integrating, as I mentioned, both forward as well as backward.
I just wanted to know this because what would be the sustainable rate of growth? Leaving aside the cyclone and other parts, raw materials and all that.
Yeah, it is true, but it's just that we are basically contemplating to ensure that we maintain our growth in a steady manner. Of course, whatever at this present level is there, we would definitely want to sustain those, and we look at growing in a consistent manner. Maybe I have to tell you the truth, and of course it will be a double-digit growth to be precise. I can't give you the exact number, but we are hoping to maintain that, and also by the various steps which will be taken by the company.
Okay, thanks a lot.
Thank you.
Thank you. We'll be taking the last question from the line of Yogna Chiswani, who is an individual investor. Please go ahead.
Hi sir, thanks for the opportunity. So, as you mentioned that you are looking to grow from here by way of going forward as well as backward integration. So my question to you is more on a forward integration front. So for a company like Apex, which sells its product in US through distributors, retailers, private label, and does not have its own brand or network as such. So what are the dynamics like in such a scenario, and what kind of margin difference does that create?
Apex Frozen Foods does have its own brands, of course. However, which is of course the Bay Harvest, Bay Fresh and Bay Premium, which we are catering quite significantly into the European Union markets as well as the American market. However, as we deal with a significant number of retail companies and the food service companies who would want the product to be produced in their own packaging and in their own brands, we are looking at a forward integration also, but for which the plans have not been finalized or actually concretely been decided at this point. We look forward to evolve those plans and create a strong strategy for ourselves. So I can't give out much details at this point, but I'm pretty sure in the next quarter or so we will be able to give out those once we take a concrete decisions with regard to how the new set of marketing plans for the company can be done and how they can ensure a robust growth for the company in the future.
Given the current scenario, so what is the kind of margin difference? That's what I'm trying to kind of that you see.
So the margin difference is
on an average.
It depends because we have not yet fully studied the other side, which is basically on the forward side at this point. So as we would be in a much better position to be precise, maybe at a later stage, maybe by the end of this year, when we will have a clear-cut understanding of how better the margins can be enhanced with regard to on a forward integration basis, how it can help and at to what level. So we are still not yet finalized anything of that sort. So we have not, to tell you the truth, we have not even concluded with regard to how well it can enhance our margins. So as we finish that study by the end of this current fiscal, we will be able to spill out the beans, to be precise.
And so lastly, what was your utilization number for H1 FY18?
So it was ranging at around 85 to 90%. To be precise, we have had adding additional ships for in our existing capacity to enhance our productivity. That is one of the reasons because of the growth in demand and requirements continuously flowing from our customers. We had to also run additional ships. Thereby, we actually, to tell you the truth, we are in some times of the year, current year, in the last half year, last 6 months, we would have also utilized 100%, to be precise, our existing capacity. We will be continuing to do that dependent on the needs and requirements and the order book. And once we have our new facility, we will. I am sure that will be helping us a lot once that starts up next year.
So, as I understand, this year added 3,000 tons of lease capacity. So, is it a new lease capacity that we have put in, or is it because of the extra shift that we are working as done?
No, the 3,000 metric tons is actually additional leased capacity of that facility, which we have been leasing out for the past 2 years. But what I mentioned or referred to about the additional shift, I'm referring to the existing, our own capacity of that 9,200. That could that could have actually, that got a little bit enhanced because of running this additional shift. So thereby, ensuring that it is 100% utilization. So that additional shift is actually in our own facility. So that 9,200 could actually go up to around another 2,000 to 3,000. So it depends on how the shifts are being run. It's, as I said, it is all need-based and not on a regular basis.
And so my last question will be, sometime back I saw a news article wherein there was a talk of export benefits expiring or something like that. So do you see any risk or any comments on that front, sir?
Sorry, can you please repeat that question?
Sir, in news we have seen that there are threats of export benefits being expiring in coming times. So any impact or any comments that you would like to make on that, sir?
Sir, the export benefits may or may not be, but at this point they are available, and it is in the interest of the company to enhance its own profitability, it is its own better realization and its own margins to isolate itself at some point of time from such government benefits, if at all, even if they are removed. The company wants to sustain itself of its own operating margins without, not to do much with the incentives. So at this point, we have not heard of any such. Even if if any such decision is taken, we are pretty confident we will be able to, maintain and sustain. We would want to, as I mentioned, we want to ensure that we want to have our own growth of operating margins independent of such incentives. Though we are definitely welcoming those incentives which are there, but as I said, it's a government policy which I can't really comment about. As of now, I'm not aware of any such government decision at this point. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to Mr. Subramania Chaudhary for his closing comments.
Thank you everyone for your participation in our earnings call for Q2 and the first half of the current fiscal. We have uploaded the results presentation on our website. In case of any further query, you may get in touch with Stellar Investor Relations, or feel free to get in touch with us at ir@apexfrozenfoods.com. Thank you very much. Thanks and have a nice weekend.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.